Teddy Keckstedt from Forex Trading Unlocked, and we are here on March the 17th, 2020 with a daily Forex market analysis and live trading breakdown for you. And before we get into it, we just want to pull up our disclaimer to remind you that this webinar is for illustrative purposes only and educational purposes only. You are not to be trying to mimic our trading or whatever. You're not, this video for one is in delay, and you don't know what we're doing as we adjust positions after the video either. So please do not, this is just for illustrative purposes to give you examples of how to manage trades and to look for trading opportunities. With that, here we are at our forex-trading-unlocked.com website. We already have the workstation page pulled up, and we have the Euro US dollar also pulled up. All right, we have our pivot here at $1.1236. The market right now is at $1.0982. You can see how far the market has gone from yesterday's high to now today, just hovering above the lows. The Euro US dollar, the dollar is in a big rally right now against most currencies, especially the majors, where yesterday the dollar had been it was under siege from all the major currency crosses, including even some of the lesser currency crosses. And today the dollar is prevailing right now as we speak. So this is the current action for this morning. Who knows how it'll go? We know with this volatility, we're trading at 109.79 right now. We could be at 112.79 before the day is out. So, but right now the bears are in control. So we are waiting for a signal. We had already taken out and penetrated our downside target already from when we had this bearish engulfing line. And now here we are today trying to figure out what to do with it. So we're still riding the short trade. So just to give you an idea, right now we have a short in the Euro US dollar, we have a long in the US dollar Canada, and a long in the US dollar Swiss. So this is on the MT4 platform for those of you that are users to that platform. And then we also have some Nadex options that we put on today. We have a US dollar Swiss greater than 95 quarter strike price, which expires in 3 days on Friday, and also the US dollar Japanese yen is greater than 106.75, that expires in 3 days as well. We are slightly in the money on these positions. We purchased these options, so once again we are long the dollar, long these strike prices, looking for a rally to continue moving. So now let's see how these things are shaping up. So we know that we are short the Euro US dollar right now, and we have our stops already in. So these are all winning trades. No matter what, these are all going to be plus. If the market retreats and pulls back and goes on new lows today, or new highs, whatever, depending on the indicative, we will be still profitable on the trade. So we're riding these positions, looking for the trend to continue. I think dollar strength is definitely something that you have to be mindful of right now under what's going on, considering everything that's going on in the world right now. So where is our downside target? Well, right now we're just continuing to bang new move lows. So I would say as long as you are short, keep things obviously. This 112.36 is your barrier for upside breakout. Right now, because of volatility, the swing points very wide. So if you're short, you got to hang on. That's why options are a good play right now for futures options. Remember, you're coming into the March expiration, so futures and futures options right now probably are not the best play to roll over. And when you have expiration of a month, option expiration, excuse me, especially during the quarterly months of March and December and June. And September. So during those periods, which we're coming into this week for the rollover, you're going to get some really crazy spreads in pricing. So those options right now, if you're short the futures, rolling into the front month, which would be now the June contract, is probably something that you would be doing. And I would use yesterday's high as your risk, which is the same for the Forex outright cash derivative. So right now we're bearish. We're watching the market hang off of its lows. And the question is, if you're a bull, then wait for a signal. And right now, don't try and catch a falling knife. There's too much volatility to play in this. range traders, this is a tough one. Buying in the new lows, I think, is going to be very, very rough. I think that selling into new highs is something you have a little bit better. I mean, we've been making consecutive lower lows and lower move highs, so you have the trend as your friend, and that fundamental, as long as it is maintained, keeps us bearish and gives us more of a reason to sell than to purchase this currency cross right now. So the euro right now, we'll see how the coronavirus continues to impact things. We'll see how the U.S. markets react and end their session today. There's a lot of volatility, obviously, there, as well as in Europe and the rest of the world. So we have our first major currency cross versus the dollar index that is in the gutter in a big way. You can see it's having a big move today. So now let's look at the British pound US dollar, which, oh my gosh, we had a sell signal in this market a week ago, and this market, talk about volatility. I mean, we had this bearish engulfing line right here. That's this first red day right here, first down day. The market had a nice little upside correction. Boom, bearish engulfing line, which had it pretty much targeted around $1.26. It blew through that target, and now, as you can see today, it's at $1.2044 as we're speaking. So we had a high at, what was it, just below, was it $1.3208? So basically $1.32 even right here. This was our high for the move. Okay, so, and now we're down here at $1.20. So that's a $12 move in just over a week's trading in the British pound. Now this market, when this one starts to unwind, the pound can have incredible volatility. So as we get into some of our other lesser currency crosses, we'll see how they have very, very significant volatility as of late. But this one here, when it starts to move, boy, does it move. And I'll tell you what, if you're a bear and you're riding this trend, you got some swings in this one too. So our upside breakout pivot is at $1.2426. It's $4 away from where the market is right now, pretty much. So right now, I think if you're trying to be a bull, I would really wait for a black reason to buy this thing. So as you can see yesterday, this market tried to get a little bit of a rally going, and it fell apart in a big way. Obviously, it making newer move lows to begin with yesterday, as well as continuing forward today and just really sinking like a rock. So that's really what we got. Usually when we have much more controlled market environments, we can look for some swings. Right now, when the currencies trend, they trend, and we got some power trends going on. So it's not for the faint of heart. And if you're already on the right side, in this case, it would be a bear, then work the bear side and, just take into account the volatility. If you think, if we've already moved $12 lower, who knows? Maybe we have another $12 to go over the next week or two. So we don't really know how exacerbated these moves are going to be, but it seems like either up or down in most of these currencies, we are at the inflection point for some very extended, powerful moves in the marketplace. When do we see stability? That's going to be a very good question. So none of us know. I think it's going to happen after first quarter's over and we start to see the earnings, and then we start to see if we start to see a decreasing in the coronavirus spreading around the world. So we'll see. We have a lot to deal with yet. Hopefully everyone's being cautious and trying to stay out of people's way. So here we have the U.S. dollar Swiss. Now the Swiss has been a bull against most currencies, including the dollar, for a while. As you can see, the dollar is getting a very nice correction off of the slide that it had made after it made big-time newer move lows down here at just below 92 cents. And here we are back at 96 cents. Now, this market is in a bear trend. We have downward sloping resistance that we're coming towards right here. So right around this 97 to 97.5 area, 98 even, is pretty much where I think you're going to run into a lot of resistance, even if the dollar is strong. Because the Swiss is still a flight to quality. So even in Europe and whatever, as the euro and the pound may devalue versus the dollar, the Swiss is probably going to see a slowing of that trend. And also the dollar, even when things are good, has had a really big trouble with parity. But who knows? Maybe this is the new bridge that's going to take the U.S. dollar above parity and rock the Swiss market. So right now, obviously, we have a long position in the NADEX binary options, and we also are long in the FX cash. We have nothing in the futures or futures options, just because, especially with rolled over, we don't bother with it. There's just no reason to. Right now, we're still continuing to watch this little bull go, and we use the low from yesterday as our directional pivot at 93.86. A failure from here has us banging new lows, possibly back down to 92 cents and even lower as the US dollar falls versus the Swiss, but that's probably not going to happen right now for the next couple sessions. It seems like the dollar rally that's going on is overwhelming all the currencies, especially the major currency crosses. This is probably going to be just a short burst, but with the volatility that we're having, expect to have some big moves. I mean, the mere fact that if you look at the Swiss over the past, this is going back to the beginning of October, all of these trading days here, everything before the last 2.5 weeks or so, there was only a handful of days that remotely had, half a dollar moves going on. And now here, just in the past 2 weeks, we've had multiple days where you have at least a half a dollar range, if not more. I mean, today we have a low of 94.48 and we have a high of 96.32. Excuse me, that's almost a $2 range. That is very excessive volatility for a currency like this. It is usually known for its stability and not lack of volatility, but not over-exacerbated volatility. And right now, what we have a very powerful rally going on. Even if this is just a correction, this is a very quick bounce. I mean, on March the 9th, we had a low of 91.82, and here we are, we're, at 96.27. So there you are. Right there you have, a $4.50 rally within the course of a week and a half in a currency that just typically does not speed off like this. So we'll see what's going on now in the US dollar JPY and see what's going on in Asia. Now, the yen has had some crazy volatility of its own as of late, but after having set a low like the US dollar Swiss did, and this is where I have to think you have to be mindful of the US dollar bull. There's 3 flight to quality currencies. 1 is the dollar, 2 is the Swiss, and number 3 is the Japanese yen. With the dollar rally going on against these 3 currencies, that kind of lifts it against most other currencies as well, which in considering that it had been in a very bearish slide excuse me, from the middle of February into the beginning of March, it's a big turn of events, a big turnaround. So if we continue to make higher move highs and higher move lows, it's very likely that this US dollar Japanese yen bull that had been around for a very long time until the past month, basically, it may be back, and now it may come roaring back in a very big way. So right now, where we're long, or excuse me, the market, well, we are long here, but as the market is trading at 107, the likelihood of it continuing to make higher move highs, especially if it gets above the high from 2 days ago, I mean, then you're back around 109, 110 area. This is an area where the market had floated for a long time while things were good and there was no virus. So if this is any sign of strength, of true strength, especially if the Japanese yen can get back up there over the next week or two, I mean, that's normally what we would look for, is at least a week or two progression with the volatility we have, and now it could be there in a couple days. And if that does start to happen, especially because it seems like everything is increasing in speed as far as the reaction in the markets to things, then we could be in for one crazy bull here. So this is not as easy of a trade to look at. I would say you key off the 105, 127, yesterday's low as your directional pivot. If you're an aggressive bull, this would be your risk level. I think anything below here, you're going to be in a choppy grind lower, potentially hitting, newer move lows within just a matter of days. And that's the thing I think you have to be worried about, is that the longs could get slaughtered here. But if this market does break out and makes another higher move high and takes out yesterday's or 2 days ago's high, then I think we have a good show of strength, because then we come into this area where the market had support for a long time. So we're hovering right below that area. So the question is this going to be resistance, and then we fall back and can take out this 105 level, or is this going to become support again and lift this market up? So the US dollar bull, we'll see how it handles this one. Against the other currencies in this trading region, you have the Australian dollar, US dollar, where the dollar is just pounding this market. I mean, look at the volatility. just in this one day that we had a week and a half ago. And now we've taken out those lows severely and last week, and it's continued to pound new move lows every single day this week. I mean, the volatility in the last week and a half is very, very strong here. So our breakout pivot is the last high, lower move high at 66.89. Everything below here, we're in a sell rally forecast. There's really, unless you have a very good reason to buy this and have some signal, I can't imagine why you'd want to try and buy into this right now. There's just no reason. Even if dollar strength starts to wane against Australian dollar, US dollar, I think you're going to get something like maybe like a small correction like was here, or you're going to have a violent day like this, which is very likely to happen in some of these thinner currency crosses, which is not an easy trade here. So if you're a bear riding this, think about that. If you had been keeping your stops tight and you were stopped out and you missed the next slide down, and if you were buying into this thing, oh my gosh, you had just gotten crushed. So please be mindful of the fact that the currencies are trending right now as a whole in a big way with extreme volatility. Now we have the New Zealand dollar, US dollar. The high from 2 days ago is our upside directional pivot at 61.49. All trading below there keeps us in a very bearish posture, aggressively looking for new move lows, just like with the Australian dollar, US dollar, and especially if the US dollar yen continues to rally, that pretty much solidifies dollar strength in the whole Asiatic zone. And that's something to be mindful also as far as, while you're trying to figure out what side of the market to be on. Just remember the volatility, be very, if you're cutting back on your positions, that's a very smart idea, because you have to be able to, there's a lot of reward for the risk right now going on with these market swings, but you have to downsize your positions and make sure you have the margin to withstand these things. And you don't want to blow all your capital either. So now it's time to step back and, wait for if you're not already in the trends and working a ride right now, just wait for a signal. The market's going to be here tomorrow. It's going to be here the day after. The question is, will you be? So you want to make sure you wait until you have a valid reason to jump in. Now let's take a look at a currency that has been just rocking in a swing, and the US dollar Mexican peso here showing strength once again for the US dollar. The market's at over 23 pesos to the dollar. Spring breakers are having a great deal getting their exchange rate this spring. So 21.35 pesos to the dollar is where our upside, or our directional pivot, trading below here will have us in a sideways posture, not bearish. This market was a bear for a very long time, and as you can see just in the last 4 months how this market had been just trading below, just around 19.5 to 18.5 pesos it drifted down to. And then, like a balloon underwater here, we're almost 5 pesos higher now. So it's quite significant in strength. It's not for the faint of heart. There's a lot of volatility here. So unless you are very familiar with this currency and are very disciplined in your money management, I would say be very cautious and probably just stay away from the peso market right now. If you're not already long in this trend and already in a good way where you can have your risk in, and you're most likely going to be able to still stay in a profit. I mean, this market's swinging, so you can drop 2 pesos in a matter of a day. So think about what kind of risk you have to have on. So very dangerous to trade this market right now. It's not for the faint of heart. You got to be nimble, and I would not try and jump in front of a freight train right here. Is it going to get toppy? Is it going to start to run out of gas? It's possible, but who knows how far this could run yet. We could go to 30 pesos to the dollar before we spike and come down. Now remember, markets go out like they come in, so we'll see how steep this is. We'll see how fast it contracts as well. Now in the same trade zone, we have the US dollar, Canadian dollar, which is pushing through new move highs today, also with a big aggressive move. Now we have this gap down here that has yet to be filled. The low from yesterday at $37.25-ish, that is our directional pivot. All trading above here. We are looking for higher move highs. Currently, we're doing that, so we're riding that wave right now. Obviously, we're along this position. We will continue to raise our stop as we move through today's trading at the close and the rollover into Wednesday's trading session. So we will see how that goes over the next few hours. Right now, it's looking good, and this is confirming dollar strength once again in another one of our strong currency crosses in the dollar index. So here we have all of the majors that we've looked at that are pushing, the dollar is pushing stronger against all these currencies. So now let's look at the US dollar, Turkish lira because this is another one that's had extreme volatility. Irony of it all, the one currency that we look at, the US dollar Turkish lira, had spiked a higher move high today and right now is trading lower. Isn't that interesting? Where in the world did this come from? Of all the currencies in the world, the Turkish lira has breaches new move highs and is spiking lower. Is this the beginning? Is this the indicator that the US dollar is going to turn? It's going to start here and then start unwinding in other currencies? Who knows? We'll see. But we do have a potential sell signal that is checking out or shaping up here. We'll have to wait until the close of today to find out what's going to go on with that. So you'll have to tune in to our next video. So subscribe to our YouTube channel, Forex Trading Unlocked, and you'll be emailed and notified when we go live with our next video, which we will definitely be covering to see whether or not we have a valid sell signal here. So right now we don't, so don't be thinking that you should jump in front of the signal and get short here, because for all we know, this market could be back up on its highs before the day is over. But right now, it's looking like the dollar might start to get a little bit of a sell-off here. And then even if we do, it's going to be something like this, what we'll be looking for, a 1 to 2 day, 3 day, 4 day at max kind of little correction with a nice little extreme volatility break. And just look at the volatility they had yesterday in the market. So if we come off this as a high and then we have 3 or 4 days where we hit lows again, coming back for a nice correction, we could see the market back around this 6.20 to 6.30 area, right somewhere in here. That would be a very easy correction for this market to come back to. But this is also a market you have to be very disciplined with, be very experienced trader because of the wideness, the wide spread that's in this currency cross. Like, it's very expensive to get in and out of this market. So you really have to catch trends, and you really have to be mindful of what you're doing. So, but this is also a good way to see what the dollar is doing. So you can use this as an indicator to trade some of the more liquid, less volatile, less dangerous currencies for people to be trading. So we do have this one signal. Let's go back to our Euro US dollar, our big dog in the dollar index, and it is still just hovering above the lows. So this is what we have. We have a bunch of momentum plays that are already in motion, and we have a potential signal shaping up. And in case you want to learn about some signals, there's a book called High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. You can use this in the Forex, the futures, the stocks, options, binary options markets. All kinds of markets are these patterns are useful, and that you can use for trading signals to hopefully capitalize on and potentially lift your bottom line for your trading. So with that being said, thank you very much for tuning in. Remember, we have some signals that are shaping up. We'll see how those are in our next video. Please subscribe to our YouTube channel or check us out anytime you have when you're trading the Forex markets. Go to www.forex-trading-unlocked.com. Have a good one.